Hello and welcome to Web3's, the 3-minute podcast where we explore all things Web3. And today we're going to celebrate the football season kicking off by taking a deep dive into Barcelona's recent €120 million deal to power its digital and Web3 initiatives. So let's go. Now, as always, we're going to chop this up into 3 sections and have a look at how this deal impacts their finances, their football, and also their future. So let's dive in. First of all, let's look at the finances. Interestingly, when you dive beneath the headlines, this deal actually is just a rehash version of a deal Barca announced last summer when they did a deal with Web3 fan token company Socios and a media agency called Orpheus Media. That deal was for €200 million and provided them with a 49% stake in Barca Studios. Socios was going to put 100 million in and Orpheus was going to put 100 million in, and therefore they both would have 24.5% of Barca Studios. Now, interestingly, this deal was to be made in installments with only €10 million payable up front each, and then tranches of 30 million each year after. So they both made their €10 million payments last year, but this year they didn't. Now, I can't find the reason why the payments were delayed, but ultimately those payments weren't made. And when we look at Socios and ultimately their underlying token, we can see that's down 60% since the deal was announced last year. So therein lie may have some of the challenges that led to them not being able to make this payment. But ultimately, that left a €60 million hole in this year's financial plan for Barcelona that was submitted to La Liga. And without rectifying that, Barca would struggle to sign new players or register the ones that they'd already announced that they'd signed, like Gundogan, and I'm a big City fan, so that definitely hurt. And so ultimately, Barca went back out and they resold some of the shares that they sold to Orpheus and Socios in the summer of 22. And so they were able to announce a deal for €120 million, selling 29% of the shares to two investors, one called Libero and one called NIPA Capital. Now, interestingly, they just get their shares equally pro rata from Socios and from Orpheus. So looking ahead, Barca still retain 51% and 49% are held by third-party shareholders. But that brings us on to point 2, football. The funds that this investment has raised are needed to help Barca register and sign new players. So I'm unsure and it's unclear how this comes through the headline of an investment into digital and Web3, but ultimately it's a sign of how Barca are needing to look at all their assets and explore all options to drive more revenue and more cash to sign players. And so that brings me on to point 3, the future. With Barca having to sell a lot of their assets, 49% in their content studio, Barca Studios, they've sold 49% of their broadcasting rights for the next 25 years. You can see how very quickly they're stealing from tomorrow to pay for today. And I think that's ultimately what's driving the headline behind digital and Web3 and the drive behind Barca Studios. And that's because one of the things that stands Barca in good stead is that their brand is massive, even if their revenues, when you compare them to the brand value, aren't. And this is a problem that's true across football. When we look at Barca, when we look at Man United, when we look at Manchester City, their brand value is huge. They're billion-dollar brands, but their revenues are in the hundreds of millions. And so therein lies the challenge. These clubs are looking now at more ways in which they can interact with fans because the desire and the hunger for content is there. And so digital is going to play a massive part in the way that clubs can start to drive significant revenues moving forward in a way that they can control and they can drive through content. And we're seeing this already. Just look at the success of the All or Nothing seasons on Amazon. Look at the success of Welcome to Wrexham, story of Wrexham from the conference into the National Football League. Sunderland Till I Die, an earlier one on Netflix, and the massive and growing amount of content that we're seeing on YouTube. Fans increasingly want to get an insight into their clubs. They want more content on their clubs and their favourite players. And I think this is where clubs are finally realising, wait a minute, this is an untapped area for us. And with Web3, using technologies that can connect clubs and fans and use that to reward, to engage, and then to monetize, I think we're going to see some really interesting strategies. And this is why, whilst right now it's not quite clear what Barca Studios is going to do to justify its current 400 million valuation and its rumored 1 billion flotation that it wants to do on the Nasdaq later this year, you can ultimately see the momentum that is building in the digital sphere. That means they're going to have options in terms of how they start to deliver real value against that entity. And so I think it's a really exciting time. I think that sports clubs will start to look at Web3 in a very serious way and look at how that complements their current digital and video content strategy, and ultimately how it can drive fan engagement, fan discovery, and also fan rewards. So could be an interesting one to stay on top of. So that's this week's episode. I hope you've learned something about Barcelona and how they are currently feeding off tomorrow to pay for today, but that might not be the worst bet in the world. That's it for this week. I can't wait to catch you on the next one.